بسم الله الرحمن الرحيم. أعزائي طلبة وطالبات الفرقة الرابعة شعبة اللغة الإنجليزية كلية التجارة جامعة كفر الشيخ، أهلا بكم. ومحاضرة مادة بنك أكاونتينج اللي هنستكمل فيها بإذن الله تعالى ما بدأناه في اللقاءات السابقة في موضوع المحاسبة عن القروض في البنوك. Last lecture we learned how to account for the first type of loans. We have three types of loans as we discussed before. The first type is the commercial loans, and we learned how to record the issuance of the loan, how to compute the interest earned of that commercial loan, and how to record the issuance and the accrual of the interest on commercial loans, and how to record the repayment of the commercial loan too. Today, inshallah, we will talk about the second type of loans, which is real estate loans. Real estate loans are usually secured by liens on real estate, and we have two types of real estate loans. First is the construction loan, and second, the mortgage loans. What's the difference between these two types of real estate loans? Construction loans are made to finance construction of a building. In this case, bank determine maximum amount of lending limit for the construction loan. The builder submit bills received from some subcontractors to the bank, and the bank pays directly to the subcontractors. Interest earned is calculated and recorded at the end of every month. When the building is completed and sold, the borrower will repay the loan from the sales proceeds. This is the first type of real estate loans, which named construction loans. As you see, the client receive proceeds in installment or in gradually amounts pieces, and repay the loan one shot by the end of the maturity date, or as the contract says. The second type of real estate loans is the mortgage loans. These loans are made to finance purchase of a completed building. This is the difference. So, real estate mortgage loan is usually long term in duration of 10 to 30 years. Payment terms require the loan to be amortized or paid off periodically. The client take the loan one amount, and repay it in pieces periodically or monthly or quarterly over the period of the loan. The period payment includes part of the principal and part for the interest. The annuity or the pieces or installment paid to by the client to the bank includes part for of the principal of the loan and part for the interest on the loan. The interest would be calculated using a method similar to that used in commercial loans or the cash receipts method. Let us take an example for each type of loans. The type 1, which is construction loan, example 4.2, assume that the ABC contractor company started the construction of a building. The company borrowed a construction loan from Misr Bank, Bank Misr. The bank will allow the company to borrow a maximum of 3 million Egyptian pound for construction. The annual interest rate equals 13%. The bank made the following disbursement to subcontractors. First disbursement equals 70,000 pound to Sun Company on May 10th, 2005. Second disbursement 100,000 Egyptian pound to Mon Company on May 16, 2005. Required: record the journal entry for the above transaction. Second, calculate the interest earned at the end of May and record the journal entry. Once again, the company, ABC contractor company, make a contract with Bank Masr to borrow a construction loan up to 3 million Egyptian pound. The annual interest rate equals 13%, and the disbursement gradually the bank will pay to subcontractors gradually. The first disbursement equals 70,000 to Sun Company on May 10th, and the second disbursement was 100,000 Egyptian pound on May 16. Let us record these transactions. To record these transactions, we have an asset increased, which is the construction loan, by 70,000 Egyptian pound on May 10th. It's gonna be debit, and cash or cashier check gonna be credit. This journal entry will be on May 10th. Let us see the answer. Yes, real estate loans debit 70,000 Egyptian pound, and cashier check loans credit for 70,000 Egyptian pound, payment on May 10th. the same journal entry will be made on May 16 when the second disbursement made. We will record an asset, which is a real estate loan, gonna be debit for 100,000 Egyptian pound, and cashier check will be credit for 100,000 Egyptian pound. This is required number 1. This is a journal entry to record the disbursement of the construction, 2 pieces of the construction loan. The second requirement is how to calculate the interest on these payments, on this loan for the month May. The disbursement number 1 granted on May 10th. The disbursement number 2 granted on May 16. So the real estate loan was amounted 70,000 Egyptian pound for the days May 10, May 11, May 12, May 13, May 14, and May 15. 6 days. To be increased on May 16 by 100,000 to become 170 to the rest of the month. So we will compute the interest of the real estate loan for 6 days for 70,000 Egyptian pound, and we will compute the interest on 170,000 Egyptian pound for 16 days, from May 16 to May 31st. You know, the real estate loan equals 70,000 Egyptian pound for 6 days during May, from May 10 to May 16, and the real estate loan become 170,000 Egyptian pound for 16 days the rest of May month, from May 16 to May 31st. How to calculate the interest now? Interest of the first disbursement for the 6 days equals 70,000 Egyptian pound times 13% the annual interest rate times 6 by 365. This is the period. You know how to calculate the interest. The amount times the interest rate times the period here in days, 6 days divided by the number of the year days, the number of days of the year. This is the interest of the 70,000 Egyptian pound for 6 days, and we have to add the interest of the total amount, which become 170,000 Egyptian pound times 13% the interest, annual interest rate, times the days remaining on May 2015. which equals from 16 to 31st equals 16 days. 16 days divided by the number of days of the year, which equals 365 days. If you made these calculations, it's gonna give you the 149.59 for the first amount. The second amount gives you the result 968.77. Total interest on the real estate loan during the month May gonna be equal 1,118.36. This is the amount of interest on the real estate construction loan during May. How to make or how to record this amount? It's gonna be recorded this way: interest receivable real estate loans debit, interest income real estate loan credit. This is an accrual. This is an accrual entry, journal entry. You know, when we receive the interest, it's gonna be cash debit and interest receivable credit to be closed, as you know before. This is an example of the first type of construction loan, which is a real estate loan, which is a construction loan. Now let us go to another example, but this example on a mortgage loan. This type of loans, as you see in this example, let us see. Assume that Muhammad Ali borrows 100,000 Egyptian pound from Alexandria Bank for a period of 4 years to buy an apartment on May 1st, 2015. May 1st, 2015. For 4 years. An annual interest rate equals 12%. Monthly payment are equal. Yes. The client Muhammad Ali receives the total amount of 100,000 Egyptian pound from Alexandria Bank, but he will repay this loan and its interest periodically in terms of installment, in terms of annuities. So each annuity will include part of interest and another part from the principal of the loan. The annuity, the amount should be paid each month or each year, is calculated or has to be calculated using actuarial calculations. If we meet the actuarial calculations and determine the equal amounts that should be paid each month, the monthly payment on this loan, mortgage loan, by calculating the annuity, and it was 2,000 and 633.38. This is the monthly payment. This is the monthly payment. Okay, Muhammad Ali will pay by the end of each month an equal amount equals 2,633.38. This is the monthly payment that should be paid by the client Muhammad Ali to Alexandria Bank. Note the following. The monthly payment equals 2,633.38 doesn't change over the life of the loan. Number 2, the amount of the monthly payment applied to interest decreases each month, while the amount applied to the loan principal increase. Number 3, interest income is recorded on the cash receipts. In this case, we will not make an accrual journal entry. The application of the monthly payment and the journal entries recorded and the amortization schedule and the ledger accounts are shown below. Real estate mortgage loan, partial amortization schedule, amount of the loan equals 100. It is 10 here is has to be omitted. 100,000 Egyptian pound, borrowing a 12% interest rate for 48 months, which is 4 years, 4 times 12 months each year, 4 years, 12 months each year gives us 48 months duration of the mortgage loan. The following is the schedule of amortization of the loan. This schedule includes the date, the transaction, the current payment, partial of payment applied to the interest, and balance of payment represent reduction in the principal, reduction in the principal. This column for the interest, this column for the reduction of the principal of the mortgage loan. On May 1st, 2015, the original borrowing amounted 100,000 Egyptian pound over here. By the end of May and the first day of June 1st, Muhammad Ali has to pay the first monthly payment. The monthly payment has to be equal, and equals 2,633.38 pound. This amount is part of it applied for interest and another part applied for the principal. First, we have to compute the interest. The interest here will be calculated as follows. The amount, the principal amount equals 100,000 Egyptian pound. The interest rate equals 12%. And we are calculating the interest for 1 month. So the calculation of the interest will be as follow: 100,000 Egyptian pound times the annual interest rate times 1 by 12, the period, 1 month from 12 months to make the period per annum or yearly, because the interest rate here is per year. So the interest of the on the principal for the month May equals 100% 1,000 times 12% times 1 by 12 equals 1,000 Egyptian pound. So the interest equals 1,000 Egyptian pound. The remaining amount from this payment will be applied for the principal. Amount paid equals 2,633.38. From this amount, 1,000 interest. The remaining amount represents reduction or repayment of the original loan or the principal, which equals the remaining. If you subtract 1,000 from this amount, it's gonna give you 1,633.38. You have to subtract this amount from the original amount, because this amount represents repayment of part of the original loan. So the balance of the mortgage loan by the end of May or in the first day of June will equal 100,000 Egyptian pound minus 1,633.38, remaining 98,363.62. This will be the balance of the mortgage loan at or on June 1st. On June 1st. By the end of June and on the first day of July, the second payment will be done, which equals 2,633.38. What the amount of interest on of this amount? We have to calculate the interest on the balance. The balance on during June will be 98,366, and the interest rate will be 12%. Let's go to the calculation of interest during the second month, which equal 98,366.62 times 12% times 1 month by 12 months. The interest during or dedicated to the second payment or the second month will be 983.67. This is the interest part of the second payment. The interest part of the second payment equals 983.67. Remains the difference between the amount paid and the interest has to be paid. The remains equals the second part, which is related to the principal, which represent repayment of the principal of the mortgage loan. If you subtract this amount from the balance on the first day of June, gives you the balance by the end of June or by the first day of July, which equals 96,716, and so on. You see the third payment to make it again, to continue calculating and let you know how to make the amortization of the mortgage loan. The payment number 3 by the end of July and the first day of August equals 2,633. Payments, as you know before, is an equal amounts. Equal amounts should be paid by the end of each month. So from this amount, how much represent interest and how much represent a reduction of the principal? First, we have to calculate the interest. How to calculate the interest? We will use the loan balance on the 1st of July, which equal 96,716.91 times 12% times 1 by 12. It will give you an interest of the loan or the balance of the loan during the month July. Interest will equals 967.17. If the interest equal this amount, the remaining amount represent a reduction of the principal to reach the balance of the mortgage, loan by the end of July, and the first day of August will be 95,050.7, and so on. This is a part of the amortization schedule. This is the calculation of interest during the first 3 months. This is the way to calculate the balance of the principal or the loan by the end of each month, and this is the amount. The calculation of the balance of principal is calculated as you know, as you see. Now let us record the issuance of the mortgage loan on May 1st. On May 1st, the date of the issuance of the mortgage loan, we will record the real estate loan type mortgage, debit for 100,000 Egyptian pound, and the cashier check loans credit. This is the issuance of the loan. By the end of each month, we will receive an annuity equal payments equals 2,633.38 Egyptian pound. Cash will be debit each time with this equal amount. As you see, by the end of May, first day of July, cash debit by this amount. by the end of June and first day of July this is the first day, 61st. This date has to be July 1st, 7 instead of 6. This is a mistake. It has to be 7 first. The amount is fixed, the same, cash debit. And the cash debit for this amount on August, it has to be 8 instead of 6. Here we have to correct it and make it 8, the month August over here. The bank receive equal amounts by the end of each month, as you see. But which accounts gonna be credit? The accounts which will be credit are interest income and the real estate loan mortgage. Interest income buys the interest amount, and the real estate loans mortgage buys the remaining amount of this. First month the interest equals 1,000, so the real estate gonna be credited by the remaining, which equals 1,600. If you see, total of these two amounts equals the paid amount, which makes the cash debit by this amount. Second month, the paid amount is the same, but the interest income is different from the first month. Why? Because the balance of the real estate loan become less, so the interest on the mortgage loan gonna be less in the second month and will be less or lesser in the third month, and so on. As we note before, the amount dedicated to interest gonna be decreased, and the amount dedicated to the principal, or which represent a repayment of the repayment of the principal, gonna be increased. This is account of real estate mortgage, and this is account of income or interest income, T account. We have to stop here to be contact with you next time, inshallah. And I hope that these two examples and the problems that you will take in section give you a good consumption or good understanding of this topic. To meet you next lecture. Good luck. Assalamu alaikum wa rahmatullahi wa barakatuh.